Hi there, Serial Trader here. Got a request for a little update here on the S&P 500. So we'll just take a brief look here at SPX. Now, big picture, we're still working our impulse wave out of this large triangle as I have it labeled. And there's some areas of interest that are coming into play. Okay, so we had the, given this interpretation, A up, triangle B, now we're in the C up. So the AC relationship, the 618 multiple came in at 32.31. We've obviously smashed through that. But the equality relationship, so if this wave C up off of our triangle bottom is equal in length to our initial wave A up, that would come in at 3,463 and change. So still a pretty good move up, maybe another 80 points up or so from current levels. And the way this market's been moving, it's not that much of a stretch to see it getting there. But let's kind of dive in here. Now, we're still within this channel that I've had drawn for quite some time. We did briefly poke out of it, and that was a bit of a fake out because we just surged right back up to new highs, and now we're still making new highs. So it's kind of dangerous here. Dangerous and tempting. So tempting to just say, screw it, the market just goes up every day, enough of this. I don't need to worry about defining my risk or having a good pattern. Just go long, and you can't go wrong here. Now that might persist for a while, but eventually you will get something like that. There will be some sort of larger degree pullback. And if you just went blind long with no plan, especially if you're using leverage or something that's time sensitive, that has an expiration date like an option contract, you don't want to do that. So that's why you do want to have a nice setup to define risk against and also get some targets. But you also don't want to say, you know what, this is getting ridiculous. It can't just keep going up forever, which is true, but it can still go up a lot more and a lot longer than you might think. Screw it, I'm just going to short here and, eventually it's just going to work out for me. And you can try and do that, but what if you go short here at 33.80 something and we just keep grinding higher to, closer to 3,500? That's not going to be a very good position. And especially if you try buy puts or do something that's time sensitive. You may ultimately be right, but run out of time, or you don't want to be in that situation. So here, from a trading perspective, I can't really recommend doing anything other than just waiting for something to present itself. There are some things to point out. We do have a clear bearish divergence here on our RSI here on the daily chart. A clear lower high on RSI, but a clear higher high in price. So that's one of the things you'd look for in a topping formation. If we go into, let's see, the hourly chart, it certainly looks like we have a fairly mature looking 5-wave sequence off the most recent low. We got a 1, 2, a 3, 4, and working our 5th wave, which looks quite mature itself. So you can certainly make the case here that, and you even get little bearish divergences here on the hourly RSI and the hourly MACD moving averages. You can certainly make the case, hey, this looks really, really topped out. It's diverging, looks mature on the wave count. Let's short this down to the ground. And it might just keep going up for a while. So you need something. You need a good candlestick reversal or a nice clear 5 waves down. You need to be picky here because you're really going against a strong uptrend, at least for now. But eventually there will be some sort of larger pullback, and it would be nice to play that. But just no signals yet. Just keep watching, keep waiting here. And I definitely have my eyes on that equality relationship at 34.63. If and when we get there, let's see what happens there. Does it just keep marching right through that like nothing, or do we start, doing little dojis up there and start coming down. We'll have to see how it reacts. But that is a nice, technical point where we could get a reaction. And that is a common relationship for a C wave coming off a B wave triangle to be equal in magnitude to that A wave. So I like that. And okay, so even on the weekly chart, if you look at that, I mean, we're getting a divergence even on the weekly RSI. So you can see we made that, I think that was a fairly historic peak in weekly RSI there in January of 2018. I think that was the highest weekly RSI on the SP in decades. And you can see, even though we've made a significantly higher high, RSI clearly making a lower high. So again, even on the weekly here, you got a pretty clear long-term bearish divergence on the RSI. But again, until it actually starts going down, it doesn't mean anything, right? Just kind of a warning saying, all right, we should be on the watch for a reversal, but it is not a signal in and of itself. It's just a condition to be aware of when you're looking for a potential top to form. So it goes up every day forever until it doesn't, and let's just keep watching for now. I mean, if you're just an investor and you're just long the market, you've certainly been given no reason to be uncomfortable or to sell. Although I would, basically, if you want to be a long-term trend trader and you're just long the S&P, every time you get a higher high and higher low, you want to adjust your stop to the previous high or low. So the most recent high or low is right here at 32.14. Let's call it 3200. So if I was a long-term investor slash holder, I would adjust my risk, my stop to that level. And if it just keeps making higher highs and higher lows, just keep moving that stop up. But that's currently where I would want to be getting out and reassessing my investments if that got taken out. Just a thought. Anyway, that's all I really have to say about SPX. Maybe I'll do a more in-depth video on the rest of the indices and the volatility situation and everything on the weekend there. But until further notice, we just keep grinding higher. All right, Serial Trader signing off.